Hello everyone, we are Group 4 and welcome to our presentation for our final project in the subject Corporate Finance. And first of all, let's go through our watch list analysis. And firstly, we need to know more about the business that our group had chose. So let's go to the business introduction. And in our watch list, we include 10 enterprises, and all of them is on the Ho Chi Minh City Stock Exchange. And first, we have NKG, which is Nam Kim Steel Giant Stock Company. NKG is a leading coated steel manufacturer in Vietnam, established in 2002 with an initial charter capital of 60 billion Vietnam dong. NKG is also the top 3 reputable building material exporters in Vietnam and currently manages and operates 4 factories with a total capacity of 1.2 million tons of final plating products per year. The reasons why we choose NKG is that at the moment, NKG's business has high potential on the market. As you can see that NKG's net profit is expected to grow by 27% according to Mirror Access, based on 3 main arguments listed on the slide. And in 2021, NKG recorded 105.7 billion Vietnam dong in revenue, more than 4 times higher than the same period last year, where export revenue of NKG accounted for 68% of total revenue. Next, we have HBG, which is Hoa Phat Group Joint Stock Company. HBG is one of the multi-industry manufacturing groups in Vietnam, starting from a company specializing in trade and construction machines. HBG now expanded and currently operates in 5 sectors. And to answer why we choose HBG, it is simply because HBG is outstanding when this is the largest steel producer in Vietnam with capacity of 8 million tons of crude steel per year and many more other noble titles. In addition, the market context has many positive signals where the government is encouraging public investment and HBG is benefit from supplying construction steel. The third company is Hoa Sinh Group Joint Stock Company, HSG. And it was established in 2001 and has 2 main product groups, which are products made from steel materials and plastic products. First, we choose HSG because it is the #1 enterprise in the field of steel sheet production and trading in Vietnam, with a long history of the industry. Hoa Sinh Group is a pop-up name when people think of steel manufacturer, and the revenue forecast for 2022 of HSG is promising when the revenue in the first quarter of the fiscal year 2021-2022 set a new record when it is increased by 86% over the same period. The fourth company, we have Tiền Giang Investment and Construction Joint Stock Company, TXG, formerly known as Tiền Giang Equity. The fourth company is Tiền Giang Investment and Construction Joint Stock Company, TXG, was established in 2003. The company's business activities include construction, real estate trading, real estate production and trading of building materials, and mechanical repair enterprises. TXG is special because thanks to TXG, Tiền Giang province can attract more public investment. Starting from the success of Mỹ Tho Industrial Park and now Gia Thuận 1 Industrial Cluster and Gia Thuận 2 Industrial Cluster, TXG has built a reputation and plays an important role in contributing to the investment attraction of Tiền Giang province. Next, we have FPT Joint Stock Company, formerly known as Food Technology Company, established in 1988. The company mainly operates in the fields of software, information technology, system integration, telecommunication, and education, and currently is the top 3 leading internet service providers in Vietnam. And in the last 5 years, FPT has a positive financial performance. It can be seen from the expanded net profit margin with a CAGR of 22.8% from 2016 compared to its competitors in the IT business. With digital transformation as a global trend, the IT industry is likely to grow substantially, which is favorable for FPT to grow stronger in the future.
The sixth company in our watch list, which is CMG CMC Technology Group Joint Stock Company operate in the field of information technology, telecommunications. The first reason why we pick CMC is that this is one of the two leading system integrator in Vietnam. The company dominates the key market with the largest IT investment in application in Vietnam. With digital transformation become a global chain and has been a top concern. Investment in digital transformation is still growing at a compound annual growth rate of 15.5% between 2020 and 2022. One more point is that CMC has reached a significant growth rate despite COVID-19 hitting hard worldwide at the gross profit exceeding 30% over the same period. Pre-tax profit accumulated up to 37% over the same period last year. The next one is CNG. CNG Vietnam was established in 2007 with a current capital of 19.2 billion Vietnam dong, aiming to transport and supply compressed natural gas to serve the needs of Vietnamese enterprises with low gas pipeline network pressure. We put CNG into watch list because the company is a pioneer in popularizing CNG product in Vietnam and also currently the largest enterprise in the industry. CNG has ensured gas output and gas quality to supply customers, which reached the milestone accounting for nearly 70% of the market share, reaching 119% compared to 2020 and more than 111 of the year plan of 2021. Another reason is that CNG witnessed a considerable increase in net revenue in the last 5 years, up to 31%, and which is the reason why it is currently in the favor group with positive promising growth. The next one is BV Gas was founded in September 1990 with a vision statement of becoming the best retailer of LPG in Vietnam. Through 28 years since its establishment, Petro Vietnam Gas Corporation has always been not only the largest LPG supplier of Vietnam, but also the key player of the market. Moreover, VG Gas has been currently focused on the storage project, which is seen as one of the most significant factors affecting the growth of BV Gas stock on the platform. And what makes us take BV Gas into consideration is the political conflict between Ukraine and Russia make a huge contribution to the skyrocketing of petroleum price, which contribute to a dramatic increase in revenue exceeding 46% of the quarterly plan up to 49 over the same period in 2021. The next one is Đức Quân Investment and Development Joint Stock Company, FTM, formerly known as Đại Cường Thái Bình Texco, was established in 2006. The company mainly operates in the field of manufacturing and trading yarns. We chose this company because there is a positive trend in the financial report recently. Specifically, in the fourth quarter alone, the revenue reached more than 77 billion Vietnam dong, an increase of 110 compared to the same period. The profit was almost 6 billion, extremely clear compared to the less than 1 billion in the fourth quarter of 2020. And the next one, which is the last, is Eva Pierre Joint Stock Company, formerly a branch of FICO Muslim in Korea, was established in 1993. It holds the leading position in terms of market share in bedding industry and the cotton sheet industry in Vietnam. We decided to consider Eva Pierre Joint Stock Company as according to a report in November, revenue increased 27% over the same period. Total accumulated revenue in 11 months of 2021 reached about 753.1 billion, up to 1% over the same period in 2020. And the next is the part of Win.
So next, I will talk about the risk and the return of the watch list. So about the information technology stock is one of the hottest and the most popular stock at the moment. Therefore, it's not surprising that the two stocks with the highest return rate among the watch list are found in this type of industry. The stock with the highest return rate is CMG, and the second highest position belonging to FPT. However, the annual standard deviation of FPT is much lower than CMG. That's evaluation rate of equity is also the lowest among 10 stocks chosen. Therefore, equity is the most worth buying stock for the investor. CNG and GSA stock are stock in the utility sector, which characterizes as steady dividend along with the relatively lower inflation limit than the generation stock in the market. Therefore, we can see the return rate of CNG and GIS are not too high compared to other kinds of stock in the watch list. Utility stock is often unpopular with the investor during the periods of economic growth. However, during economic downturn because of current anti-epidemic policy, utility stock will be a good choice for the investor. NKG, HPG, HSG, and THG as stock in the building material industry. We can see that PSG is the best among the four stocks with the highest return rate and only second lowest risk evaluation rate. HSG is the worst with the lowest return rate and highest risk evaluation rate. The return rate of the THGs is lower than that of the HPGs, but its annual standard deviation rate is the lowest among four, so that is still potential stock for the investor. FTN and EVE are household goods manufacturing stock. This is the group of stock with the lowest return rate among the industry mentioned above. The most notable is FTN with a negative return rate, showing that this company is losing money. In that, many reports show that this company is at a loss and is in danger of going bankrupt. This also explains why the annual standard deviation of FTN is very high and is the highest among the 10 selected stocks.
And next, in terms of choosing the 5 best stocks for our portfolio, we plot on 10 stock upon risk and return comparison chart. There in the vertical sheet where we say the annual standard deviation and the horizontal sheet where we say the annual average return of each stock. To determine which stock play the best role, we consider the method that has high return and low risk should be chosen, which help our investment have a great benefit in the long term. Besides that, we also focus on the historical data on each stock in order to have a comparison in case of finding the best one. In the comparisons between CNG and THG, which have approximately the same level of annual standard deviation, but different in annual average return, also between NKG and GAS, which have approximately the same level of annual average return, but different in the annual standard deviations. Due to our strategy as high return and low risk, we decided to choose THG instead of CNG because of the higher return and GAS instead of NKG because of the lower risk. At the end, our 5 best stock investment is officially selected.
So the next part is the average annual return. The average annual return AAR is a measure of how much an investment has grown on average per year over a given time period. It shows us the actual gain or loss in investment and is an important tool to have in further analysis to decide whether the investment will be effective or not. For the formula in Excel of annual return, first we determine the adjusted close price of the stock and find the daily return with the formula that below, and then calculate the average of those days and multiply by 250. And above is the annual returns on stock of companies that our group computed. As the figure beside shows, the rate of return from each stock is over 30%, except for GAS and THG. Looking deeply into each stock with an annual average return of about 28% for group portfolios, return is substantially higher than the market 14%. As the figure the
the five securities corporations we chose were not significantly different in proportion and also nearly the market portfolio's annual average return, except for GAS. The CMG has the highest AAR and outperforms the market portfolio at about 22%. And the top two of the list are belonging to FPT Security Corporation, and the top three is HPG stock, which is still greater than the VN index. And a relatively modest return on the market is reflected in the overall trend of the market. Many small and medium-sized enterprises have poor profitability, and some large ones are struggling to make ends meet. But there are a few corporations on the market with excellent financial performance and high return, such as some of companies that we recommend. The market return in general is significantly less compared to our portfolio's return, even lower than the stock with our portfolio worst performance GAS. And for the group portfolio, the yearly return yields are remarkably higher than the VN index. There is a lower return of 7.5% compared to the CMG, the highest percent in annual return, and the higher of about 10.5% compared to the GAS percentage, which is the lowest percentage in a yearly return, and the rest of the stock fluctuate quite close to the group portfolio index, about 4%. And in other words, investing in those stocks with the same weight will give the expected return on average, not too high or not too low. The AAR percentage of HPG is higher than that of THG and GAS. This is quite an appealing number for the organization. This relatively high return is mainly from two key factors. The first one is that we focus on firms with high returns, low risk, and good financial performance, which operate in industries with high growth potentials at our initial strategy. Thus, the high returns of those stocks make the portfolio's average return also high in general. Second, the outstanding return of CMG also contributes to the high return of portfolio on average.
Beside the return, investors should focus on risk if they want to make any investment. To measure the risk, we use standard deviation and variance. The standard deviation is calculated as the square root of variance by determining each data point's deviation relative to the mean. If the data points are further from the mean, there is a higher deviation within the data set. Thus, the more spread out of the data, the higher the standard deviation. And if a company stock have a high or low standard deviation, indicates that that company has high or low risk, respectively. We will give our opinion on group's portfolio and market portfolio risk. First is about our group portfolio. CMG has the biggest standard deviation in the group, and it is the top of the market with 41.38%, indicating that this form stock contains too much risk. We will not invest in it if we need somewhere safe to put our money in. GAS and HPG with standard deviation nearly double the market with 33.3% and 36.89% respectively. This group standard deviation are still high and we need to consider carefully if we want to own any stock of them. Another subgroup includes FPG and THG. This group had the lowest standard deviations in our portfolio with 26.58% and 28.53%, but still high and still risky with those companies. In some, the firms selected are from various industries such as technology, gasoline, construction, and this group volatile strongly in the period due to COVID-19, political tensions, and other objective causes. As a result, the group standard deviation is quite high with 21.82% and about 1.16 times higher than the stock than the market's portfolio stock. This indicates that holding stock of this group is risky when your access may increase or decrease unpredictably. However, with high risk, this group's portfolio is hoped to be profitable in general and stable after all risks have passed. Next will be about market portfolio. In the past 5 years, from 2017 to 2022, VN Index representing the market's portfolio got 18.76% in standard deviation. This number is not too high, but also not too low, indicating that the stock market is a bit risky but attractive to investors. From that number, we find that the industry in Vietnam are changing and adapting the global context in an acceptable way. In general, the Vietnam stock market is an exciting playground for both domestic and foreign investors. Next will be the systematic risk.
Next, I will show you the systematic risk, which is described as a risk that is inherent to the entire market or market sector, since it affects the economy as a whole and cannot be diversified way. To measure this risk, we calculate the beta coefficient to see the volatility of a security or portfolio compared to the market as a whole. In Excel, to have the beta coefficient, we use function slope, where the first input is the stock historical returns and the second one is the VN Index returns. And after that, to have the beta for the group's portfolio, we multiply that of 5 stocks that have been done previously with the weight of each stock, which is assumed to be 20% to each, and sum them together. On the other hand, to have the market beta coefficient, similarly to the stocks calculation, we use the slope function, where the first and the second input are the market's historical returns, and the graph on the slide illustrates the result of our work. And as we have mentioned above, beta is a measure of the volatility of a security or portfolio compared to the market as a whole. Therefore, the benchmark for the result here is the market. Hence, when we compare the market with itself, the result equals 1, and this number is a standard for us to compare other stocks. If the stock is more volatile than the benchmark index if the beta is larger than 1, and the stock is less volatile than the index if the beta is less than 1. And about our group's portfolio beta, it is equal to 0.926, which means that our portfolio's return is in a safe range and has a strong connection with the market. However, the profit we receive will not be too much, and the beta coefficient of 0.841 indicates that the company's stock price is less volatile, less risky, less profitable, and strongly correlated to the market. Currently, the technology industry is a potential industry with an average growth rate of 8% from 2016 to 2020 and expected to strongly develop in the next several years. And therefore, it takes a high chance for the value of the stock to grow more in the near future, but with less magnitude than the overall market. And similar to the CMG's beta coefficient, that of FPT indicates that the company's stock return performed 95.8% over those of the market, which means less profitable and less risky when compared to the market. However, the compared with the figure of CMG, FPT stocks still has a higher return and stronger connection with the market. This is also a potential stock to invest in thanks to the high opportunity for the industry to develop in the next few years, especially after the COVID-19 pandemic. And the company is also a big brand with a high reputation in the sector. And the beta coefficient of GAS indicates that the company's stock price is more volatile, riskier, and more profitable when compared with the market. If the return of the market is 100%, the return for investor of the stock is even higher to 33.8% than the market, and this stock has a high chance to increase its value in the next period because of three main reasons. The first reason is the average annual oil price is expected to fluctuate around 70 USD per barrel in the period 2021 to 2023. And the second reason is the urgent demand for natural gas in the context of increasing electricity demand in Vietnam. And finally, GAS is currently in the phase large investment, creating premise for the growth of the company in the long term. The beta coefficient of HBG indicates that the company's stock price is more volatile and around 15.9% higher than the market. Although it can bring a higher profit to the investor, this stock also had a higher risk when compared to the others. Regarding the potential of the stock, our group believes that in the long term, the value of the stock can grow more thanks to the high demand for steel products in the post-COVID-19 period all around the world, especially in China. Another opportunity for the growth is based on the current situation, which is the Russia and Ukraine war. Due to the conflict between the two countries and the negative impact of the COVID-19, the price of basic commodities is higher and therefore increasing the risk situation. However, with some investors, this is an opportunity. Hence, we can witness a rise in speculative trends in basic commodity stocks and push the price higher. And the beta coefficient of THG indicates that the company's stock price is much less volatile, less risky, and less profitable because the return of the stock performed only 33.2% over those of the market and is weakly correlated to the market. THG also has a high chance of growing in the next few years, but different from Huafac, this company's opportunity mainly comes from the domestic demand. From 2021 to 2030, Vietnam's government would like to speed up the development of the Mekong Delta area. Therefore, there will be a rise in demand for the company's project in the next few years. In addition, the Yang Investment and Construction Joint Stock Company also has an investment plan for some key residential areas of the Yang, hence the profit can rise soon. And this stock is a good choice for investors who prefer a safety strategy. And next, we will discuss portfolio optimization. And in the previous part, we assumed that all 5 stocks in our portfolio were weighted equally, which is 20%. However, this assumption cannot support us to maximize our portfolio's profit and minimize the standard deviation. Therefore, we use Excel solver to find out the optimal weight for each stock in our portfolio. And the main objective of this action is to minimize the risk of the portfolio. In addition, there are some constraints to make the result more accurate, including the sum of the weight of 5 stocks must be equal to 100%, and the chosen variables must be non-negative. After conducting the necessary steps and hitting the button solve, we receive the result listed on the slide here. And in the table, we realize that our standard deviation, which is considered risk at the risk has decreased from 21.82% to 19.95%, and our beta coefficient increased from 0.841 to 0.87, and the group's portfolio is better after this step. And that is the end of our presentation. Thanks for your listening and wish you have a nice day.